with Dion Shango, who's a partner in the Energy Utilities and Mining practice at PwC. Hello, Dion.
Good morning, Charlotte.
Where are we in the mining cycle? I have an idea it's normally about 10 years in duration.
Yes, mining is a long-term industry. Now, if I take you back a couple of years, you'll remember there were the boom years before 2008. Then the global financial crisis set in. Then from about 2011, 2012, it appeared as though the mining industry was coming out of the challenges that were presented by the global financial crisis. But in 2012, there were signs that perhaps the industry was suffering from a bit of a confidence crisis. But looking over the long term, if you look past all of that, Charlotte, I think the industry is still in recovery mode following the global financial crisis, and that it will return to good profitability in future, and that the long-term fundamentals are still good in the industry.
Is it too early to be buying mining shares then?
Well, if you look at the valuation of some of the mining stocks, some would say that it is the perfect time to be buying mining stocks currently. We've seen how the HSBC Global Mining Index has decreased 23% year on year. Some people may see that as a compelling buying decision or buying consideration to make right now.
But then, of course, you've got to wait for a while. It's not going to be an immediate return, is it?
Exactly. If you are interested in mining, you better have the patience to be a long-term investor. It is definitely something that will not yield returns in year 1, 2, or 3. But if you are a long-term investor, then definitely it remains a compelling investment decision.
We're seeing quite a lot of cost cutting in the mining companies, and we've got new chief executives in place as well. How significant is the role of management in cutting costs? Because some costs are fundamentally driven by steel prices and explosives prices. They're commodities linked. So is management effective in this?
Absolutely, Charlotte. No CEO will be able to positively impact on the price of steel or energy or oil for that matter. However, what shareholders are demanding out there is for management teams of mining companies around the world to try and drive better efficiencies out of the business. What does this require from a CEO? Some think that long-term experience of your engineers and your geologists become crucially important at times like these to ensure that only the best reefs are mined by companies out there, to ensure that the best reserves are accessed at the earliest possible period. So in that way, experience that has been garnered over many years comes through for management teams who operate on that basis.
You know, that's quite a contentious area because the whole high grading argument, if you take your best reserves and reefs now, what are you going to have for next year?
Well, you would hope that commodity prices work in your favor going forward, and that even mining some of those inferior quality grades is still profitable and viable for the company in future.
Do you think we're having a big bath on the impairments? We've seen some massive impairments from the mining companies. Are we likely to see write-backs?
Great question, Charlotte. You've got to consider what it is exactly that's causing the impairments. Do impairments raise questions as to whether mining companies have forgotten how to mine all of a sudden? I think not. I think these impairments are really a response to the low commodity price environment that mining companies find themselves in. Many companies made acquisitions over the years at much higher prices that were used in valuations as assumptions. And in a lower price environment, one's got to assess some of those values that have been assigned to assets on their balance sheet and see whether those are still fairly valued. What we have seen in our analysis in the current year is that many more of the impairments were actually relating to your tangible assets and your property, plant and equipment. And in those type of assets, if you do impair, international financial reporting standards do allow you to record those write-backs in future should sentiment improve going forward and should those commodity prices recover to suitable levels.